Monday, October 1st, 2020, Maneco 64, home of alternative economics and contrarian views. Today we're going to talk about how Captain Powell is keeping investors on the dance floor, and I think it's a dangerous proposition to stay on the dance floor of the sinking world economy, sinking U.S. economy, or the sinking Titanic, if you want to call it that. Before I start, though, I'd like to thank all the supporters of the channel for another very good month. We've had a lot of new subscribers, a lot of views. Of course, I'd always like to have a lot more views than I get, but we just have to keep plugging along. So yeah, the stock market continues to levitate. I see not just people in the alternative, but you look at comments from people everywhere around the blogosphere. How can the stock market go up 500 points after such a horrible debate? How can the stock market go up when the uncertainty is so great? Well, I think it's got all to do with all the liquidity, all the money creation from the Federal Reserve. I think there's a tale of two countries, not only in the United States, but in the UK. I've seen videos recently showing homeless people out in California. And don't forget, yes, a lot of people say California is a basket case, but California, don't forget, is the 5th biggest economy in the world. It's bigger than the UK economy. So what happens in California is a very big indicator of what could happen in the whole of the United States and the whole of the world. So I recommend people watch videos by Jeremiah Babe. It's a YouTube channel. He's done a few videos about the homeless situation in California. It's eye-opening. It's not just people who have fallen out of society through health problems, through personal problems. It's people who are actually still working but can't afford housing. For all of those out there who say that there is no inflation, well, there is rising prices for housing, for rent, for buying a property, even for people who work. They're living in their cars or living in tents. So this shows the tale of two cities, right? While on the other side of the spectrum, we've got professional golfers, and I watch that, and I love golf, but I think it's obscene that a professional golfer can win $15 million from winning a tournament like Dustin Johnson did. I'm not having a go at Dustin Johnson, but you look at the big sponsors of the PGA Tour, it's all the big financial institutions who are benefiting, of course, from all this liquidity and all this inflation, right? And then you get people like another guy I saw. This is in California as well. This is Venice Beach. And the guy's called German in Venice. It's a German guy who's been living there for 30 years. He talks about Venice Beach. He likes Venice Beach. He still thinks it's a great place, but he made a video on the 15th of September, entitled Homeless Encampments Spread to Venice Beach, New Skid Row. So this is not a good sign. And then in the UK, for example, I read a story yesterday in the Daily Mail about the new job support scheme that's going to come online after the furlough ends in October. And it says, job support scheme webcast, it doesn't involve or help us. So these are people in the travel agency business, and I recommend you watch this video. So I'll put a link to that story. It was in the Daily Mail. In the UK, for example, as well, if you look at what's going on in London, yesterday, what's his name, Grant Williams, he tweeted, he's back in the UK. He's originally from the UK. And he was in London. He tweeted pictures of central London, of a place called Five Guys, a restaurant. There's no one in there. He tweeted a picture of Leicester Square just after midday, empty. He tweeted a picture of Charing Cross Station, Where I used to work near, when I worked for Citibank, Citibank was in the Strand. It's empty at just after midday as well, at 12:30 p.m. yesterday. They're killing the economy. I think, yes, we're in a tale of two economies. There are people that are fortunate enough to still be doing okay. I have to say I am one of those. I'm fortunate that I did what I did 5 years ago. I did have my ups and downs, of course, when I left the city in 2012. And why did I leave? Well, the desk that I used to work at the firm I used to work at, was closed down. I tried to get back. It was very difficult at the time. So I started my own business. I did have savings. That business didn't work out. And after about 2.5 years, I closed it down. And we had to rethink things. And for the last 5 years almost now, I've been doing my videos on YouTube. I've been covering precious metals in particular. I've been working with people as well in the precious metal space, and my business has picked up again, and I don't have to go anywhere to work. I'm basically self-employed, working from home. So for me, I've been fortunate and enough that I've set my house in order, financial house in order 5 years ago. And that's why I keep telling people, you need to try to get out of debt. A lot of these people are in trouble because they had debt, because they were not able to pay off that. So they lost their homes. They had to start renting. It's all about the debt. I think if you can try to get out of that, that's the most important thing. So yeah, the stock market can keep going up, I think, a bit longer. There are some people who think it can up until November. Yes, there's a lot of mayhem, division, political uncertainty. But as I said, the central banks, they just are there to help people. I think investors have become so complacent. They know that Jay Powell or the other central bankers are going to come to the rescue if anything bad happens. So they're scared of missing out. But if that was possible, if central bankers could just create money and credit out of thin air ad infinitum and make everyone wealthy, it would have happened already. We wouldn't have people on Skid Row, people living in tents, people crying on interviews about their businesses collapsing, right? So the rubber will hit the road and things will be seen as they should be, the reality. Right now, we have a fake market, we have fake money, we have fake statistics, and I think it will come out, the truth. And when that does, you want to be your own central banker. And why do I say that? That's a term that Jim Sinclair really originally made. Some people attribute it to other people, but it's really Jim Sinclair who talked about that. You need to be outside this financial system as much as possible. You need to have your own currency. Well, the only currency you can really have that's got a track record that's survived thousands of years is gold and silver. There's a silver florin, which is 2 shillings. 925 silver. That's how you become your own central banker. I started reading Catherine Austin Fitt's new report that came out recently, The State of Our Currencies. It took her over a year to write it. I haven't finished it, but the basic premise so far that she talks about, the basic conclusion she gets, is how can you trust any currency when there is no transparency, when you got FASB 52, when you don't know how much the deep state has stolen from the American people. Well, she thinks it's in the 60 trillions. When you can't really get a clear, transparent audit of what's going on at the Treasury, you can't really trust the dollar. And I think gold is still showing that things are not well, and I think one needs to look at the Dow Gold ratio to realize that the rally we've seen in the last 6 months, or the continued rally that we've seen in the last year and a half towards new highs, is very artificial in terms of real money. And that's why I always like to look at the Dow to gold ratio here. And you can see that the Dow actually made a top in September 2018 versus real money at 2241. You might ask, why should I look at Dow versus gold? Well, don't forget, in 1929, gold was money. So the Dow was priced in terms of gold, in terms of real money. So right now, as you see, we're consolidating here. I think that ratio is going to go a lot lower. That means that gold and silver especially will outperform financial assets. Don't get caught in the ballroom in the Titanic. Get off the Titanic, I would say, personally. Get into your lifeboat, be it a gold or silver one. Yes, it might not be as comfortable as on the Titanic, but the Titanic or the whole world economy, the dollar system, is in trouble, in my opinion. And yeah, they might be able to save it, but it's going to be very uncomfortable in there, or it might sink. So you might as well, I think, be safe. And that's my view of what's going on. Of course, it's really hard right now with all the decisions that politicians make, with all the different decisions as well in the US, all the different states. Hopefully, a lot of you have been able to protect yourselves financially. Hopefully, a lot of you still have your jobs, and I'm fortunate to be in this position that I am. So let's quickly look at the markets now. It's 10 to 9 a.m. London. So precious metals yesterday, gold held fairly well. Silver got hammered a little bit. Right now, gold is up $10 at 1896.50. The high's been 1900. So it looks like the powers that be are trying to keep gold below that level. I don't think it matters. As I've said before, gold is going to go where it needs to go. As I've said as well, you need to get hold of physical gold and silver by staying in the ETFs, in futures, in paper assets. You're helping these people who are in charge, these people who have really transferred trillions and trillions from you, the taxpayer. And how do they do that? Well, as Catherine Austin Fitts says, by issuing trillions in debt that are lumbered on the taxpayer, and then taking those trillions and buying real things. So it's a huge transfer of wealth. Spot silver is up 42 cents right now, up 1.8%. So it's rebounded a little stronger than gold. That's not surprising, but we're still below 24. We're at 23.63. Stock market continue to go higher here. The Dow futures is up 240 or 0.86%. S&P is up 26 or 0.75% at 33.84, and the Nasdaq 100 future is at 11,490, up 0.71. The currencies, British pound is down 0.33% at 128.83. The euro is up slightly at 117.30. Dollar is unchanged versus the yen, 105.53. Crude oil is down just over 0.5% at 40.04 WTI. And the 10-year yield is actually ticked up a little bit. We're back up to like 0.7%, still very low in relative terms. But yeah, it did trade up a little bit yesterday, and it's trading up a bit overnight. It's up 2 basis points. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.